professionalinvestor.com's daily brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. La, 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 la. I get the impression somebody was a little upset that cameras weren't on yesterday. I don't think that's really a game changer. Having said that, I appreciate the feedback. Always want to make this a better broadcast. If I understand correctly, I think I wouldn't mind actually moving away from this live broadcast and seeing if maybe we'll do like a live broadcast for the video call, like in the Zoom here, and then maybe edit it up. It seems to be what all the cool kids are doing on YouTube, and we don't really get that many views of these videos. So obviously whatever we are doing is not working, but anyway, we'll just keep trying, make slowly better, more progress, etc. Anyway, it is Friday, TGIF and all that, middle of the summer. So hope you're getting out there and enjoying the nice weather. Liam and I had a really nice car ride yesterday out in the lower mainland countryside. So thank you all for your best wishes in that regard. Seems to be working to a certain degree. 12th of July. Jesus, we're almost halfway through this damn month already. Wow, where did it go? The end of the first 2 week study. And actually, this is interesting because in the after party, and actually, that's probably something we should have had on the itinerary there. Maybe you can add it down at the bottom, first 2 week study. Thanks, Chris. Anyway, in the after party today, being Friday, we have special guests. I suppose that's probably something we should have put on there as well. We have Marat. Marat is our level 2 instructor. A damn fine gentleman at that. Yeah, a damn fine teacher and a scholar and a gentleman, I would say. And interesting how, we seem to have him on right around this first 2 week study because he's going to do his relative rotation guide, which interestingly enough will feed right into that first 2 weeks kind of thinking. So it should give us a pretty good idea where the fund managers are putting their money to work. So it should be a really interesting after party here today. Marat, I think he's actually on the call here with us, even on the free call here. You want to say hi to these good people, sir?
Hello, everybody. Hi, Brian. Yeah, I'm
There you
here.
are. All right. So looking forward to a great conversation with Marat in the after party.
Yeah.
And if you're interested in relative rotation, it's a good opportunity for you to consider joining us on the other side of the Great Wall for daily brief after parties. Every Friday, we like to bring on a special guest. And as I said, this week we have our level 2 instructor, Marat. So it should be a good conversation. If anything, we almost get into, sometimes they call these the summer doldrums. I do find that once we get through sort of the July 4th holiday weekend, keep in mind a lot of professionals, they basically check out the middle of May, something around some guy's birthday or something like that. Maybe you've heard that been mentioned once or twice. We do have a lot of tax loss selling driven sort of downward pressure into the end of June. Then it's sort of like everything's kind of sanguine and meh. I mean, in this screwy environment, we've got the tech stocks outperforming when the blue chips are underperforming, and then it just goes back and forth, back and forth. But I was even sharing on the site here earlier today. I don't know whether you people are aware of this, but we are now fully into this greed cycle now. I'm not quite sure where I posted it on the site, but I mean, you guys have all seen this 100 times before. but not a bad idea just to review with you guys and girls and houseplants. But you got to understand this is where we are. You might find that we get into a situation where the market just, for like the next 5, 10 years, just slowly grinds higher. Because keep in mind, they've done the reset, right? The money printing is done. That's past tense now. That's not future tense. That's past tense. They've blown up the size of the economy now at $30 trillion, whatever the hell that means. And now, if anything, what has to happen is all of the other assets in our society have to play catch up to this hyperinflation of the money supply. It's the way this game works. Nothing changes. I do find it fascinating how, like, day by day by day, you go on YouTube and you listen to all these talking heads, and nobody seems to see this bigger picture. I don't know what it is. I'm actually quite surprised that I can't get this message out to the world. So, I wouldn't be surprised if we're in one of these kind of situations where the path of least resistance is up, not down. And the irony of it all is that our economy's basically done nothing for like literally the past 20 years. So anyway, not really a big surprise to see stocks sort of grinding their way higher here today. As well too, we're also seeing well, maybe we should get back on schedule here. So I'll save all the rhetoric for the after party. Okay, so where were we? Breadth, interesting. We put in a W here on the fast. And also too, looks like a bit of a W there on the slow as well. One thing that really jumped out at me yesterday, and I was quite surprised, was and I wanted to show you that. Now, you don't really see it that well here today, but I can't remember which screen I have on. I guess it's the screen over here. Russell 2000 has just been on fire here recently. Oh, god damn, that stupid NASDAQ short worked. Not funny. Anyway, I took the trade off. Like you can see the top that came in, but I took the trade off heading into the daily brief here because I didn't want to be distracted. Oh well. Anyway, Russell 2000's been just on fire here recently. Small cap market coming back alive. And I think that's on the perception that the Fed is very close to ending their interest rate increase path. Although I might argue that today's data is it's going to throw a bit of a wrench in that. But anyway, Russell 2000 was up a huge number, like 3%, some just incredible number yesterday, which was quite surprising. And interestingly enough, the money actually going into the Russell 2000 was actually coming out of all of these big fat tech stocks. Notice most of them were heavily down yesterday. Problem is, one day doesn't make a bear market, and I don't think that these stocks have actually topped out just yet. Actually, so anyway, the thing that jumped out at me was small caps really outperformed there. And I think you can see that in the breadth data, right? We had a lot of the little stocks all move up aggressively yesterday. So you might find that we flip back over and head back into bull mode. Breadth wise, the only problem here is, geez, we're already in nosebleedy levels. I can't justify getting too bullish. But I will say, I thought it was interesting. Last weekend, we worked away on producing a report on Alibaba. And I looked at the options, and the options were, unfortunately, this is an expensive world we live in now. And the options are just getting more and more expensive with every passing day. It's just actually, that's DeFi. So, as a good example, those darn Baba options I was looking at like $6, they're like now $9, $10. Oh, jerks. Here it is here. Look at that damn thing. Just we were looking at it right here, and I was like moaning that $6 was a lot of money to spend on these damn things. And look at that. They hit a high today of $9.31, 50% in 1, 2, 3, 4 days. Ay, 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 ay. So obviously we can't chase that. I have to let that thing calm down a little bit. And one thing I don't like about this market, I build very specific indicators, try and keep me out of trouble. And it's always a question of where the hell did I put the damn charts? I gotta take a chance on this one. And there it is. Yay. So this indicator, Willie, whenever he gets stupidly overbought, yellow line is above minus 20 on the Williams percentage R. This is a heavily modified Williams percentage R. I'm not really allowed to buy here. I just got to leave this thing alone and let the correction happen. Let this thing come out of the overbought zone, and then we can start thinking about participating again. So, and you can see, look at the huge hole in the chart, the ES price chart right in here. So, like literally the past month, I've been sitting here going, I can't chase this market. I'm going to get myself into trouble if I do. And it just keeps grinding its way higher. I wouldn't be surprised. It's actually interesting that there is where Willie officially went stupid, and interesting how that is the 50% retracement level now. So whatever type of correction this is, and actually it's interesting, level 3ers, I think I mentioned this on Wednesday's video, the VIX, if you look at the open interest on the put options, you can clearly see that they are expecting some sort of correction in the not too distant future, because the open interest in the put options, the strikes are getting higher and higher and higher. So clearly the smart money thinks that the VIX will go up here over the next couple months. And I might argue, I mean, it's interesting. I think this is a good example of what's good for Wall Street is not good for Main Street, and what's good for Main Street is not good for Wall Street, and vice versa. Why do I say that? I mean, the poor old consumer, and I mean, let's call a spade a spade. In a weird sort of way, the capitalists, they don't really care too much about the consumer. Just as long as they just keep punching the clock, go to work, collect your paycheck, pay your rent and your bills and your taxes, basically slavery. And just, if you're happy, they don't really care. If you're unhappy, they don't really care. If anything, they kind of don't want the public happy, because then that means that they're maybe going to potentially infringe on their party. I don't know. Anyway, news wise today, what I'm supposed to be talking to you guys about, although my screens, I guess this is half the problem when you have too many charts and stuff on your screen. Stock market did fairly well yesterday. Is this a screenshot or is this actually updating? In the broader market, the big indexes came down. And I think that was on the consumer prices appearing to be a little bit friendlier. Interesting how producer prices came out today, and it's interesting too, when this report was first hit the wires here at 5 a.m. this morning, market actually sold off initially on that event. And I would have expected, call me crazy, I would have expected that a rising PPI, I don't see how the Fed can be overly stimulative and talk about cutting interest rates if you have producer prices rising. So I'm not quite sure how that fits into the broader market expectation of rising. Isn't that interesting? Is this thing delayed? No, there we go. So as you can see there, PPI came in 0.2%. That's a little bit higher month over month, basically in line with expectation. This, I think, was the number that caught people's attention, the core rate month over month. I suppose they don't have year over year data here. Not quite sure why not. But anyway, so that core rate jumped up quite a bit. It's awfully tough to justify the Fed lowering interest rates in the face of that. And PPI stands for Producer Price Index. So keep in mind, these are the companies. So if the companies are seeing price inflation, what are the odds are that they're going to pass that on to the customers and the consumers down the road? I don't see why not. So awfully tough to make the argument that they're going to be aggressively cutting interest rates. Having said that, because of yesterday's CPI number, I think they were putting the odds of a rate cut for September at 80, 90%. And I suppose you can see that in the market with things like the US dollar index. And interesting how even on today's PPI data, they pushed the dollar index even lower. Still think that they're coming into technical objectives here. Isn't that weird? The other day I had two of these fogging bombs on here. What the hell did I do here? Why is this? Oh, that's weird. Anyway, there's this M here. Boom, 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 boom. There's also this cute little M up top here. So yeah, I mean, I'm thinking that probably, Fink and all his bots and liquidity pools and stuff like that. I'm thinking that really what they really want to do is run any sort of weak stops, weak lows here. But at the same time, too, if we do go through these lows, well, you can see the market's going to be smiling at us. And we can start doing A, B, C, Ds, painting down probably into this 4669 all the way down here. So the market is very comfortable with the idea that the Fed can continue lowering interest rates, or can start, I guess, down in the States. I don't know. I don't buy it, but oh well, it's what makes a horse race. Our inflation deflation gauge, thank heavens, is actually trending back towards deflationary pressure. And you can see the 10-year yield on the 10-year is rolling over as well. And really, I might argue that the Fed, the one indicator that the Fed is following, and I've shown this repeatedly over the years, but I won't pull up that particular chart. But the 2-year bond is now basically like the proxy in the marketplace for short-term interest rates. We used to use the euro dollars, and I really loved using the euro dollars, TED spread, all that kind of fun stuff. But the powers that be decided to take that away from us. So anyway, go figure. So do we have a double bottom working here? Are we breaking out here? Looks like it's trying to. I still think the jury's out, though. I mean, I think this thing has to be trending solidly above these levels for us to start thinking that, all right, the Fed's getting behind the curve and they need to aggressively lower rates. So an interesting inflection point here. No doubt about that. I suppose the final piece to all that is what are energy prices doing? And I think, just as we're at a bit of an inflection, I mean, you could make the argument this can go either one way or the other, right? We could put in some sort of M here, roll over, and that actually becomes a new sell signal. Or like you see on the screen here, we go and W out and away we go, big bull, rah, rah, rah. So I don't think it's in our best interest to call this. I think we just have to wait for it to play itself out. And then when we actually do have the anecdotal information that, yes, this is a big honking W, all right, great. That means that the Fed can actually start lowering rates. And the irony of it all is that you probably don't want to see this because that would imply that the economy is slowing. And the Fed will only really want to cut interest rates if the market desperately needs some sort of stimulus. So ironically enough, you don't really want to see these bonds break out in earnest. Having said that, it is what it is. And actually, this is an interesting time because we are coming into quarterly earnings here. Banks were reporting. And based on where we are in the economic cycle, it should give us a pretty good idea of prospects going forward, where we are. If we actually see that the financials start outperforming dramatically, and really we are actually pretty close to the point where we can start doing things like first 2 week study. So there is the beginning of July, and here we are. Today is the 12th. Interesting. So real estate. And I noticed that was another part of the market that really took off yesterday, along with the Russell 2000 and the small caps. And then, of course, what was interesting was technology was doing really well, but then all the tech stocks got all beat up yesterday. So they actually gave back a lot of their gains. So here we are with real estate outperforming, and interestingly enough, discretionary over here outperforming, and the utilities outperforming. Now, obviously, the day's not done yet, so we'll see where the dust settles. But where does that sort of suggest we are on this economic curve? And really, it's a question of if the Fed is actually going to start lowering interest rates, then we should see the financials really outperform here. So as was sort of seen on that little summary piece, we're heading into earnings season, and the headlines here today are all about the banks reporting earnings today. So we probably want to keep an eye on how these guys are doing here going forward. And look at that, Wells Fargo just getting beat up here. So I don't think we're quite at the point where the Fed actually is lowering rates. When the Fed is lowering rates, then you should see these financials outperform. Why does that look slightly different? That's kind of weird. Did something wrong there. Oh, there we go. All right. It's just my crappy mouse. That's all. Come on, you piece of garbage. All right. Anyway. Yeah, interesting. Stocks like, look at Citicorp. I remember, God, Citicorp used to rule the world. It's so small now. Anyway, so we'll keep an eye on how these financials are reporting through the day. And as I said, with Marat's report in the second half of the broadcast here today, should get a really interesting relative rotation picture. And, let's make a note of this. Marat, maybe you can highlight this. Are we seeing that relative rotation into the utilities, the financials, real estate? And it clearly looks like the market is getting the hell out of energy now, eh? So I don't think we're in this part of the cycle anymore. So we'll be keeping an eye on that and probably do up a report in the next little bit about sector rotation. Let's see, anything else I wanted to sort of chat with you guys about today? I mean, obviously, this community is slightly crypto oriented, so probably not a complete report without a quick boo at yield corn. Now the question is, what screen do I have all that crap on? Hey, there we are. So along with the stocks, they all seem to be a bit happier. Interesting how the Russell 2000 is calming down there a bit. But along with the stocks, you can see crypto's catching a bit of a bid here. Total market even moving up, so that's encouraging. Still think that these things are working bearish patterns, and unfortunately what I think is going on here is, this is actually less to do with crypto itself and more to do with things like the German government liquidating their Bitcoin holdings. Rah, rah, rah. I was posting in the lounge here today that I think the market is playing with this trend line right now. And you can see this is why it's always dangerous to take trades on trend line breaks. So you can clearly see a whole bunch of people probably got uber bullish on this trend line break, only to see an inside bar reversal and then a puke out on that German government news the other day. So here we are, market's trying to find some sort of footing, some sort of bottom. It looks like it's catching a bid like stock market wise. We should probably also too, if you fancy yourself a market participant, sort of informed in the market, probably not. And maybe we can do this in the after party if there's time. We probably want to take a look at where the heaviest open interest is on the puts and on these ETFs. It'd be interesting to see whether that IBIT has any options yet. My hunch here, though, is that they had basically bracketed this market and they probably would like to, technically fill in all these gaps, all that kind of fun stuff. But they probably want to keep it above this floor so that through the options expiry today, there's no major implications for Wall Street. They're going to head off to the Hamptons and have a great weekend on all of us. So not really sky falling kind of conversation. we're going to have to get some sort of failure signal here. We did actually get one of my favorite candles in the Bitcoin futures yesterday, the gravestone doji. And it actually did confirm here this morning. So that's not really very bullish. But like I said, because of options expiry, they're probably propping this thing up to a certain degree. And I hate to say it, but I wouldn't even be surprised if the broader stock market, half the reason you see these markets as high as they are is because of options related. I want to make sure these things go out at very specific levels so Wall Street pockets as much money as possible. The only sort of short trade idea that we have sort of working right now in crypto is this second half already on the sort of I don't know, we'll call it the free position. It's not really free. But if we do crank back up to entry, move stop to scratch, if we do crank back up into here, this will just hop off at scratch. And really, as long as this thing keeps making lower highs and lower lows, there's no real reason to touch this. You can see we got another one of these crazy ass gravestone doji kind of candles yesterday. Although the doji is a little bit high for gravestone kind of talk. I might argue that's a 3-bar fractal that's firing. Considering we're heading into the weekend, Wall Street's going to be done here. I wouldn't be surprised if this thing sort of grinds its way back up here. But as it is right now, same conversation with Bitcoin and trendline breaks. It's so important to wait for a full W on the other side of this trend line for you to actually believe this is actually really a bull market. I might argue panic low, panic high. We're probably going to just be in a trading range. And if anything, if you're a bull, what you'd really like to see is, all right, can calmer heads prevail? And we'll just, consolidate a bit. And then that sets up the trading range for the next push up. So if anything, you don't really want to see this just go straight up like this because, V bottoms, what goes up must come down. And I don't mean to be rude, but, if we simply change this to a line chart, you notice all our magical W's disappear. So I do get the impression, though, that we are sort of comfortably into that summer silly season. I had counseled that really we had to get through this July 4th holiday weekend. I've seen year in, year out that, once we're on the other side of that, Americans wrap themselves in the flag. Although this is kind of a weird year with Mr. Biden trying desperately to justify not being put in an old folks home. If anything, it's almost cliche, because when grandpa or grandma gets to a certain age and the family just can't handle looking after them anymore, they just sort of slowly get transitioned into that old folks home. And I get the distinct impression that's what's happening with Mr. Biden. So, bless his heart, he has the best intentions, but man, his age sure is showing. I was joking with somebody before we got the broadcast going. Sure seems to me that it feels as though Mr. Trump's just going to literally walk right into the White House here. We'll see. Maybe election night, everybody will feel nostalgia for Mr. Biden, and I don't know. Maybe he'll even be replaced before that. I would say, though, the odds of him being replaced and then the replacement actually winning that election, extremely low. Mr. Biden has an incredible advantage because he is the incumbent. And usually incumbents do fairly well. But I actually watched an interesting docudrama, I don't know what you want to call it, on McGovern, and when he was running against Nixon, and there was a scandal with his vice president, and he had to replace him, and Nixon just literally skated into the White House. And how ironic! The more things change, the more they seem to stay exactly the same. And here we are with. It'd be interesting to see historically it goes down. Which was a worse president, Richard Nixon or Donald Trump? I think they're cut from the same cloth. Although Tricky Dick, he was a career politician, so I don't know. Anyway, I digress. One thing I will leave off, and it's just more of a tease than anything else. Last time we saw the crypto breadth indicators looking the way that they're looking right now. Turns out it was back in, geez, pull up the wrong, too many tabs. Jesus, I gotta somehow get my act together with all these damn tabs. I know it's not that one. It's not that one. Maybe it's over here. Hey, there we go. The crypto market right now, especially like this crypto top 30, it's quite remarkable. Last time we saw a situation like this, I mean, you can see how many cryptos are all sitting here just waiting to go. I did go through name by name by name by name by name by name, especially the ones that are like hunting longs. It's interesting that both SHIB and Doge, who are basically the same thing, are in that camp. Don't really have too many buy signals here working just yet. This is just sort of saying, hey, from a higher time frame perspective, from a longer time frame perspective, now's when you're supposed to be interested in these things, not chasing the markets at the top of the market and getting your head handed to you. But the last time we actually saw a breadth indicator look like this, a weekly commodity trend survey, was back in 2022. And just to give you an idea of what happened with the crypto market following that window. So this information, I think, is incredibly valuable. And of course, this is more like professional tools. But that was basically right here. And the reports that we'll do up, we got all these sort of, hey, looking attractive. Hey, you should be hunting longs. And I mean, you tell me. All this is this just the total crypto market, like total three, without Bitcoin and Ethereum in it, just the broader crypto market. And had you forced yourself to be hunting longs and getting into trades and building positions, little old ladies, all that kind of fun stuff. I mean, you want to time your purchases. Holy crap. There's your kick-ass W's within W's within W's. And I don't see any reason why this isn't going to do the exact same thing again. But hopefully you can appreciate that this is the business that you need to buy when everybody else is selling. And then when everybody else is going stupid, and people say dumb things like this time it's different, we're going to go up forever, or they're shilling educational courses on buying the market, when anybody who's got half a freaking brain should look at this and say, you don't want to buy that, you're asking for trouble. But these people that are shilling these $5,000 courses just to learn how to circle Bitcoin on a whiteboard, they don't know what the hell they're doing. And of course, they end up getting their fucking heads handed to them. I do find it interesting. We've come off a pretty big chunk here now. And I might argue, you see these big M's. It kind of looks very similar to this. So not a big surprise that our indicators are starting to say, they're not necessarily saying, just go out and buy this and you'll make money, because that's not the way trading works. But they are definitely saying that, hey, they're throwing the baby out with the bathwater. This thing has come down an awful long way. I mean, what is that? That's, geez, about almost 40% correction here. I would prefer to see a period like this where we just go sideways and clean this market up. And frankly speaking, I think that's what's going to happen here to set up the leg that takes us to stupid levels into the end of 2026. But I mean, just ask yourself, would anybody place any really big bets? It doesn't matter whether it's venture cap or whether it's in the stock market ahead of this big November election. I don't think so. So I just found it fascinating that the last time that we actually saw this indicator look like this was basically in that oh, where the hell did the damn image go? Over here was in this window here. So if anything, if you're smart at this game and you're patient and you're disciplined, you should be just slowly accumulating all the names that meet your fundamental screens here. This is the time when you want to get serious about this. And it's the same message I had here, right? Get your skirt together. I don't know how many people listened, and you can see how long it took for the market to actually stabilize and then start going crazy. But once we start going crazy, now in this kind of environment, you want to be banging out your doubles and triples and quadruples and stuff. You don't want to be buying through this environment. Of course, that's exactly when the public is going to be most bullish. So try and think like a contrarian in this world, and you'll do a lot better. I guarantee you. All right. Have yourselves a great day. PMA for the win. Let's head on over and hang out with Marat here a bit and get his relative rotation study. And hopefully get some great value out of that. And of course, hopefully the Beamish can throw in a joke or two for a bit of levity as well. All right. Have yourselves a great day. I suppose we'll see everybody for broiler chickens on Sunday. All the best and bye for now.